Tomorrow we get US non-farm payrolls, a vital piece of the economic jigsaw, which will go a long way to shaping the next Fed rate decision. The trouble is, it's Good Friday. The US equity market is closed. The US bond market has a holiday-shortened session. FX markets will be open, but they'll be thinly manned and liquidity will suffer. So how are we supposed to gauge markets' reaction to the data release? Bloomberg made the point that the one true 24/7 market at the moment is crypto. So let's have a look at QI's Bitcoin model to see if that can help us in terms of the initial reaction to US labor market data. Bitcoin's in a macro regime. Model confidence is 65%, relatively stable. You can see from this chart. We can see from this chart, the white line is the spot price of Bitcoin. The red line is macro warranted fair value. They both were kind of moving together until really the beginning of March, and you've seen crypto explode higher, and that's why you see Bitcoin trading almost 18% rich to macro conditions. But what we're really interested in on this occasion is the drivers. Crypto is often described as all things to all men. It can be an inflation hedge. You can see here it has positive sensitivity to global inflation expectations, so it does work as an inflation hedge. Sometimes it's called a safe haven asset. It does actually have positive sensitivity to VIX at the moment. But the biggest drivers by some margin are positive sensitivity to global equity markets, both in the US and China, and negative sensitivity to interest rate volatility. It wants to move index. It wants bond vol to be lower. So really what stands out when you look at the overall macro regime for Bitcoin is it is trading like a high octane, a high beta risky asset. So if we put that together with tomorrow's event risk, if we were to get a weak payrolls report, and we're trying to work out how markets react to that, would equity markets actually like that? Weak data equals Fed rate cuts are brought forward, or is weak data bad for risky assets because it just brings the onset of recession? Then watching Bitcoin will be a very important way to get a first read on markets' initial reaction tomorrow on Good Friday.